Happy Monday, everybody. Today is May 2nd, 2022, and this is your Monday Market Update. Welcome to Military Appreciation Month. Thank you to all that serve and have served our country. More on that later in the month. While we're talking about a special month, you know I like the special days too. Today is Life Insurance Day. I will not go into this today, as that's for the Friday video, so I'll be talking more about that then. Please come on Friday to check that out. Let's jump right into a recap of last week's market action and a preview of this coming week. Stocks started the week on Monday, opening sharply lower. Soon after the open, the indices shed another 1.5% to test some technical support. This was as the markets digested more concerns about global growth, COVID concerns in China, more inflation concerns from around the world, and don't forget the fact that Putin threw cold water on the idea of the war ending with any diplomatic solution. There were no economic reports, no Fed speeches. They're in a quiet zone until the next Fed meeting, that's this week. The market focused on technicals and earnings. Coke and Whirlpool had solid earnings, and then later in the day, it was announced that the Twitter board voted to approve the sale of the company to Elon Musk. That, for some reason, was enough to light the fire under the market, and the three-day sell-off ended with a pretty major reversal. The Dow was down close to 500 points, ended the day up 0.7% or 238 points. S&P ended up 0.6% or 24 points, and the NASDAQ ended up 1.3% or 165 points. No one could stop talking about the reversal. It was nice to see, but I don't want to spoil it too much for you, but it did not last. More on that in a moment. Since we're talking about technicals, let's look quickly at what they look like on the S&P 500 these days. We're currently at 4130 or so in the S&P 500 as of Friday's close. I read three different places, three different numbers that the support is. 4170, 4160, 4130. I even read one today even lower than that. Let's hope 4130 holds. 4170 is our low from March. And we had not violated that until Friday. In fact, we had tested it a few times and we had held. If we assume 4130 is the next support level, if we violate that, we may be looking at 3710, 3545, so we'll have to see how that goes. On a more optimistic note, our April high of 4460 is the next notable point to watch. If we break that, we can move to 4500 and 4600. Also noting that the dollar has moved up again, this will make a difference at these levels to corporate profits. So listen out for that in earnings calls. 10-year Treasury yield came down a bit. That, of course, contributed to the move up in stocks, but still closing in on 3%. Going into Tuesday, people were hoping that the reversal was what we needed. There was a lot of talk about that, but the stocks opened modestly lower, drifted with the lower direction. News out of Europe was net negative, and Russia stopped gas shipments to Poland, and we had Germany say that the Russian oil embargo was a manageable idea. So we had a reversal call from Deutsche Bank, a revised call, from Deutsche Bank calling for a 5 to 6% Fed funds rate and a deep recession ahead. The S&P 500 ended on session lows just above the 41.7 level. The Dow closed down 2.4%, S&P 500 down 2.8%, NASDAQ was down 4%. All in all, a pretty bad, pretty ugly day. Back to the other side of the boat, as you've heard before. Stocks gapped higher on Wednesday. On the open, upbeat earnings and guidance from Microsoft offset negative reports from Google. Australian CPI was 5.1%. Peak inflation? Not yet. Ignored that. In case the story is not crazy enough, Bloomberg accidentally released a erroneous Facebook report previous Q2 revenue forecast, and they released it early. So stocks came for sale all across the board. Corrections were issued, but stocks could not regain their footing, and they rolled over into the close. Resume your positions on the boat. S&P 500 finished with only a 0.25% gain. Dow also about a 0.25%, and the NASDAQ just barely negative on the day. A lot of movement and not much to show for it. The bounce was not inspiring, and although the stocks are still near-term oversold and earnings seem to be solid, but it seems that we still need some of the growth fears to subside. COVID, remember that, still causing shutdowns in China, but Dr. Fauci told PBS NewsHour that the pandemic phase of COVID is over. Let's hope he's right. Run to the other side of the boat again. Thursday opened as a classic risk-on day. Big rebound with Qualcomm and the real Meta, aka Facebook, earnings being very strong. Bank of Japan was dovish, but the negative GDP number really took the wind out of the sails. Stocks pulled back a bit mid-morning, then bounced back a bit. An upbeat report from Moody's Analytics gave the bulls some energy. The market pulled back a bit into the close, preparing for Apple and Amazon's earnings. More on that in a second. Positive on the week? Really? S&P 500 up 2.7%, Dow up 2.1%, and NASDAQ up 3.4%. Facebook took the markets down on Wednesday and up on Thursday. Regardless, big recovery day, making people feel good on Friday Eve. Rain on the parade? Apple and Amazon. Wow. In case you missed it and want to keep that Monday morning smile, turn off the video now before I report Friday's market action. Okay, if you're still here, don't worry. Just calling it what it was. It was ugly. Friday started off bad and went from there to worse, and then just ugly. Amazon was one of the worst. Who did not think that as the reopening occurred, normalization would occur? Well, Amazon is overstaffed and expenses show it. Stock fell over 14% on Friday. Apple had an amazing quarter, but still warned about what China shutdowns and supply chain issues will do to them in coming quarters. Overall, the Dow closed down 939 points, down 2.5% on the week, down 4.9% on the month. S&P 500 was down 3.63% on Friday and down 8.8% on the month. The NASDAQ was the standout, not on the positive side, down 4.2% on Friday and a whopping 13.26% in April. Worst month since October 2008. Easy to see how. Netflix was down 49% on the month. Amazon was down 24% and Meta, Facebook, down 10.8%. So let's look ahead. Let's turn the page. We'll start with PMI today, manufacturing factory orders tomorrow. This week will be the clear standout, of course, will be Wednesday when the Fed will issue its statements from its meeting, and then the press conference. This will all be about how they say things. Most of what they'll say is already baked into the market. It's also the first week of the month, so jobs week. We'll have JOLTS, the job opening numbers on Tuesday, ADP on Wednesday, Thursday for jobless claims, and Friday jobs number will also be watched, but not so much. Just have to see. If it's really hot, we'll have to see what people think. Fed's quiet period will be over, so we'll hear from Williams, Bostic, Waller, Bullard, and Daly all on Friday. Over 275 S&P 500 companies have already reported earnings. More to come this week, over 150 more. So far, 80% have beaten earnings estimates and 73% top revenue expectations. Now, not so much to show for this, as we saw. As we get into this week, expect the volatility to continue. Please stay in touch for updates. Make no mistake about it. As usual, the Fed is the key. But let's also remember, as I mentioned before, this market is already priced in a slowing economy. The data is not matching that right now, so most analysts think that it will. We had a great reminder over the weekend of the tortoise and the hare story, right? As Warren Buffett in his first in-person shareholder meeting in a few years, I don't agree with all of his micro work, but from a macro standpoint, two of the biggest things that I think we should take from him going into May. Buffett does not invest in companies that he would not be interested in holding for 10 years or more. Remember, long-term investing, that's what we talk about. And one of his most famous, though attributed to many, he says, be fearful when others are greedy and greedy when others are fearful. As a value investor, there's a lot of fear out there. So please call with any questions. I'll finish today how we started. Happy Military Appreciation Month. Thank you to all those who have served, and have a great week, and we'll see you soon.